The streak is broken. There you go. 5 down days broken, finally. Good day here. Let's take a look at the markets and the action. We have Jamie Cox, Harris Financial Group Managing Partner, who says 2014 will be all about fiscal policy, and he's going to tell us the main things that you really need to keep your eye on. Larry Shover joining us in the pits of the CME. We'll begin with Larry. You could start with all the data. One negative piece, that was durable goods. Two positive, consumer sentiment. And, of course, we got a pretty decent Case-Shiller home price index that drove the markets.
Yeah, a lot. And despite the challenges, the SPX held. And really, it's exciting because we saw some momentum grow as the day went on. Unlike yesterday, where the market tried to go higher and momentum just was not there. But I think today we have the slew of pretty good earnings that came out. We have the fact that emerging markets is in a calm right now. People are starting to realize that it's not that big of a deal right now. And then lastly, we have, lastly, we're looking at the fact that we've had so many down days in a row that we're overemphasizing the down market. Momentum has kicked in, and now we're on the highs of the day.
Well, which leads some people, and I know some people hate this expression, Jamie Cox, but to say this is a dead cat bounce, that in fact durable goods orders, you look at that, more evidence that the economy's going a little slower than we had hoped back in October and November. Durable goods orders were way down last month, 4.3% down. Economists expected an uplift. It went in the other direction. What are your concerns right now?
Well, not a concern, but I think we need to look at durable goods over a longer period of time, just not one print. Yeah. If you look at 1 month, you're going to get a bad read.
Okay,
but if you look at the year-over-year numbers, still.
Hold on 1 second, Jamie. We've got to interrupt you because AT&T is just now out with numbers. Dennis Neal has them. Dennis.
Yes, Liz and Dave, and we have a beat. AT&T revenue coming in at $33.2 billion. Wall Street was looking for 33.06, so it's a nice little beat to the upside. 53 cents a share for AT&T. Wall Street was looking for 50 cents. Now that EPS growth versus a year ago is well over that 14% and 2% sales growth maybe, and also saying that in the current quarter and for the rest of the year, they could see revenue growing 2 to 3% on a company as big as AT&T. That's fair to middling.
This is great news. By the way, this is a company that offers a 5.5% dividend, just an extraordinary dividend. You see the stock is getting a little bump after hours. Larry Shover, I would just ask you, though, with the news of Apple not selling as many iPhones as everybody had expected, that leading to the downswing in that stock, will that have any legs as far as AT&T is concerned? Because they depend on a lot of iPhones.
Yeah, it absolutely could, and that might be the reason why it's trading at such a discount. I mean, the fact that it's down 4% since last earnings report, and you mentioned a 5% dividend. Forward PE is trading 16% under the S&P 500, but that whole acquisition of Leap Wireless might help them resolve some of those problems. It's a multi-year project, as it were, in a very competitive space. So, yeah, it definitely could have some issues, but I think that's why the stock's being held down.
Okay, let me throw this at you. Hold on, and we can bring Jamie Cox in here. AT&T ended up repurchasing about 54 million shares for $1.9 billion in the fourth quarter. So this isn't necessarily a new announcement of new share repurchases, but again, Jamie, this often helps stocks, doesn't it?
It does. The share buybacks help, but I think one of the reasons that AT&T actually did a little bit better than expectations is they have a huge pension plan. And that pension plan had some gravity on it with interest rates being so low over the last couple of years. So if you dig into the earnings reports, you'll probably see some tailwind from some pension liabilities decreasing. So I'd be a little careful about generalizing the earnings at this particular moment. But I would say that AT&T is going to continue to face a lot of pressure from T-Mobile and Sprint and others who are trying to whittle away their customer base by offering the promotions to terminate contracts and stuff like that. So I think there's some headwinds for AT&T, but for dividend investors, for income investors, a great
all right, Jamie, I got to put you on hold again, I'm afraid, because we got another set of earnings coming out, this time from Yahoo. Sandy has the numbers. Go ahead, Sandy.
Well, it looks like a pretty substantial beat. Ex-TAC Yahoo earning 46 cents in the latest quarter. That beats the street's estimates of 38 cents. Revenues coming right in line with estimates at $1.2 billion for the quarter. That's pretty much in line with the same quarter last year. A lot of folks looking for the display revenue. Came in at $491 million for the fourth quarter. That was a 6% decrease from the same quarter last year. We're going to keep digging through these numbers here, guys, but on the surface, that looks pretty good. Yahoo shares already climbing in after hours trading on that beat. 46 cents a share. Street was looking for 38.
And they already had a nice bump during the regular session on trading, up about 3%. But Yahoo is saying that the number of ads sold, excluding Korea, increased approximately 3% compared to Q4 of 2012. I'm just reading some of these headlines here, but the price per click, quarterly price per click, Sandra, decreased approximately 3%. This is again ex-Korea compared to the fourth quarter. So what does that tell you? Because the price per click, you've got to have that oomph behind it for the actual price versus just volume.
Yeah, so these were the numbers that everybody was looking for. So it's going to be interesting, Liz and Dave, to watch shares in after-hour trading, because right now the perception was that this was a beat, better than expected news. We got the stock up, but then on the surface there are some concerning numbers here, particularly price per click, 3% compared to the fourth quarter of 2012. That was an increase. But then, Liz, you referenced that revenue ex-TAC.
Yeah.
That was a 6% decrease. So there would be some concern from analysts here as they dig through these numbers. But again, it looks like mostly investors responding to the fact that this was better than expected on the profits and revenues right in line with estimates.
Larry Shover, there are two big problems, though, that Yahoo has. One is a declining ad revenue up until this quarter, at any rate, and then also low cash reserves. We're always talking about Apple's $170 billion or whatever it is. Yahoo has just $1.83 billion, and that's not chump change, but compared to some of its competitors, it's not a lot.
It's definitely not a lot, but they have Marissa Mayer. They also have a 24% stake in Alibaba. The valuation of Alibaba seems to grow every week. I'm not sure it's sketchy, but it does continue to grow, holding up the stock. There definitely are a lot of headwinds with Yahoo, but it's a multi-year story. Content and mobile are something that they're going to pull a rabbit out of the hat and really help turn that company around. And obviously the IPO of Alibaba is enormous, but I think content and mobile is something that's going to carry the day with Marissa Mayer in charge.
Just still looking for any comment on Alibaba because of their stake in the Chinese internet company, and that a lot of people in essence say that that's what you really need to pay attention to. That's the real cash cow, right, Jamie?
That's right. Alibaba's, that's all it is with Yahoo. Also, you need to look at Tumblr, too. You look at all the acquisitions and the ownership that Yahoo has now. I'd like to see what the click-through rate is from Tumblr, because if you can get some conversion through that type of interface, that would be a huge opportunity going forward. Because that's sort of the unknown in all these numbers, and that would be interesting to see on the conference call how Tumblr is turning out for them. But I hear that it's doing very well.
Okay, by the way, we're not finished yet with AT&T. We're still getting numbers and information out about that company. Dennis, what's the latest?
All right, Dave. So, you know, AT&T, what you want to see is growth from quarter to quarter in number of subscribers, but in several categories, AT&T falling. In postpaid net subscribers fell to 566,000 newcomers. It was a quarter ago, 363, so that's an improvement. But wireless subscribers up 809,000 in the quarter. It was up far bigger the quarter before that. Video customers up fewer than 260,000. For the 200, it was up 265 the quarter before that. High-speed internet also down. So AT&T kind of adding fewer new customers this quarter than it did the previous quarter in most of its businesses.
Interesting.
Okay. Bouncing from AT&T back to Yahoo, and I can't remember if Sandra mentioned this, but I want our viewers to know that as we talked about how the actual price per click had gone down about 3%, fourth quarter 2012 to 2013, you know, you're looking at a really nice number of quarterly paid clicks, ex-Korea increasing 17%. So again, the volume's going up, price is coming down just a little bit, but right now Yahoo is, David, just slightly higher.
It's a little bit higher.
A little bit higher.
Both AT&T and Yahoo a little bit higher. By the way, we're still awaiting earnings from Electronic Arts. We will get to Electronic Arts as soon as possible. Here you see Yahoo up. So we got a lot more to come. Stick with us.
Yeah.
Thank you, Jamie Cox, Larry Shover. Appreciate it.